What if I told you that the Bitcoin you know today is not the Bitcoin you'll see in 2026? What if monumental shifts are coming that will either make you incredibly wealthy or leave you in the dust? Forget your old crypto playbooks. By 2026, new rules will govern this digital gold, bringing both unprecedented opportunities and unforeseen challenges. Are you ready to adapt? Because today, we're not just predicting the future, we're giving you the actionable blueprint to navigate it. From institutional adoption to government oversight, everything is on the table. Stick around as we unveil the three core pillars that will define Bitcoin's destiny by 2026. Miss this, and you might miss the biggest financial revolution of our lifetime. My journey into crypto started years ago, long before mainstream acceptance. I witnessed the 2017 boom, weathered the 2018 crash, and rode the parabolic rise of 2021. Through deep dives into white papers, countless hours analyzing market trends, and conversations with industry insiders, I've developed a knack for seeing the patterns before they become headlines. I'm not here to shill coins or offer financial advice, but to share informed insights gleaned from years of active participation and rigorous study in this ever-evolving space. And what I've discovered about Bitcoin's future by 2026 challenges common assumptions and opens up a realm of possibilities most aren't even considering. Here's the twist. Many believe Bitcoin's new rules will come solely from government intervention. While true to an extent, the biggest game changers will be born within the blockchain itself. We're talking about innovations in scalability, privacy, and user experience that will fundamentally alter how individuals and institutions interact with BTC, making it far more dynamic than a mere store of value. This internal evolution, often overlooked, will be the true catalyst, dwarfing government regulations in its long-term impact on Bitcoin's utility and, critically, its price. Understanding these internal shifts is key to not just surviving, but thriving in the Bitcoin landscape of 2026. It's about seeing the forest, not just the trees. Our first crucial prediction for 2026: hyper-institutionalization. The era of Bitcoin being primarily a retail asset is rapidly fading. The problem? Retail investors often panic sell during volatility, creating cycles of boom and bust. Institutions, however, play a different game. They have longer time horizons, larger capital, and sophisticated risk management, leading to a much more stable demand floor. The solution by 2026: expect widespread Bitcoin adoption in corporate treasuries, pension funds, and sovereign wealth funds. This isn't just about holding, it's about integrating Bitcoin into their operational and financial strategies, treating it as a legitimate asset class. This will mean less dramatic price swings and a higher, more consistent floor price, reducing retail panic. The new rule for you: adapt your investment horizon. Think like an institution, not a day trader. Long-term conviction will be rewarded exponentially. This shift towards deep institutionalization will stabilize Bitcoin's role in the global financial ecosystem. Our second prediction: the rise of regulatory clarity. The current Wild West of crypto is unsustainable, creating uncertainty and hindering innovation. The problem: ambiguous regulations stifle adoption. Financial institutions fear sanctions, and average users are wary of scams in murky waters. By 2026, expect a global framework. Not a single, uniform law, but harmonized standards for exchanges, stablecoins, and even Bitcoin's classification. This solution will unlock tranches of capital currently on the sidelines. Large players need compliance. Once that's clear, they'll move. For you, the new rule: understand the specific regulatory landscape of your region and adapt your portfolio accordingly. Compliance will become a competitive advantage, not a hindrance. Those who embrace it early will thrive. It's not regulation against Bitcoin, but regulation for its mainstream integration and safety. This clarity will solidify Bitcoin's position as a legitimate asset, reducing perceived risk and boosting confidence. Third prediction: the Bitcoin Layer 2 revolution. Bitcoin's core blockchain is secure, but slow and expensive for small transactions. The problem: limited scalability hinders true mass adoption. If you can't buy coffee with Bitcoin easily, its utility is restricted. The current solution: the Lightning Network, offering instant, almost free transactions. But 2026 will see its maturation. By 2026, Also expect innovative Layer 2 solutions beyond Lightning, potentially enabling smart contracts, NFTs, and richer dApps on Bitcoin. This solution transforms Bitcoin from just digital gold into a robust, programmable monetary network. The new rule: explore Bitcoin's expanding ecosystem. Don't just hold BTC. Learn how these L2s create new avenues for utility and value. This isn't just about faster payments. It's about Bitcoin becoming the foundational layer for a new internet of value. The impact on price will be profound as its utility skyrockets beyond a simple store of wealth. Fourth prediction: Bitcoin as a macro hedge. With global inflation fears and geopolitical instability, traditional safe havens are being questioned. The problem: centralized assets are vulnerable to seizure, censorship, and devaluation by governments. Bitcoin's decentralized, immutable, and scarce nature makes it a superior alternative. By 2026, we'll see Bitcoin explicitly recognized by more nations and major funds as a vital hedge against currency debasement and systemic risk. The new rule: incorporate Bitcoin into a diversified portfolio with a clear macro investment thesis, not just speculative plays. Think of it alongside gold, but with superior portability and censorship resistance. A digital fortress for your wealth. This shift solidifies Bitcoin's store of value narrative, attracting a new wave of conservative capital. Its role as a deflationary asset will be undeniable, driving significant long-term appreciation. Fifth prediction: energy efficiency and ESG narratives. Bitcoin's energy consumption has been a major point of contention. The problem: negative environmental narratives can deter institutional investment and public acceptance. The solution: by 2026, Bitcoin mining will be dominated by sustainable and renewable energy sources, becoming a net positive for energy infrastructure. Miners are already relocating to regions with abundant stranded renewable energy, monetizing otherwise wasted power. The new rule: seek out green mined Bitcoin or invest in companies pushing sustainable practices. This shift transforms Bitcoin's narrative from environmental villain to energy innovator, attracting ESG-conscious capital. Understanding its evolving energy footprint will be crucial for public perception and long-term viability. This positive environmental story will further cement its position in the mainstream. The narrative will flip. Bitcoin isn't destroying the planet, it's incentivizing renewable energy development. This unexpected twist will be a major catalyst for adoption among segments previously hesitant. By 2026, energy consumption will be a non-issue, or even a net positive talking point. It's a powerful narrative tool that will win over both investors and governments. Sixth prediction: decentralized finance, DeFi, on Bitcoin. While Ethereum dominates DeFi today, that might change. The problem: Bitcoin's security and brand recognition aren't fully leveraged in decentralized applications. By 2026, with advanced Layer 2s and sidechains, expect a vibrant DeFi ecosystem directly utilizing Bitcoin. This means lending, borrowing, and synthetic assets powered by the most secure blockchain in the world. The new rule: understand the new opportunities to earn yield on your Bitcoin, not just hold it passively. This integration will significantly increase Bitcoin's utility and demand beyond simple store of value. The security of unshakable Bitcoin combined with the flexibility of DeFi, an unstoppable force. This will attract a wave of DeFi users looking for a more secure fundamental layer. Expect liquid staking, wrapped Bitcoin derivatives, and decentralized exchanges built directly on Bitcoin's layers. This is a prediction that elevates Bitcoin's functional role in the broader crypto economy. Those who dismiss Bitcoin as just an old technology will be left behind. By 2026, Bitcoin's ecosystem will be as rich and diverse as its blockchain is secure. Let's recap the three core pillars defining Bitcoin in 2026: hyper-institutionalization, regulatory clarity, and the Layer 2 revolution. These aren't just predictions. They are converging forces that will transform Bitcoin from a niche asset into a cornerstone of global finance. Your path to navigating this future involves adapting your investment horizon, understanding compliance, exploring L2 opportunities, seeing it as a macro hedge, and recognizing its sustainable energy future. Embrace these new rules, and you're not just investing in Bitcoin, you're investing in the future of money itself. The days of pure speculation are making way for strategic, informed participation in a growing, regulated, and technologically advanced ecosystem. Don't be the one looking back in 2026, wishing you had understood these shifts. This is your chance to get ahead, to position yourself for the evolution of digital wealth. The future of Bitcoin is not just bright, it's intricately woven into the fabric of the global economy. What are your boldest Bitcoin predictions for 2026? Drop them in the comments below. I'd love to hear your insights. If this video opened your eyes to Bitcoin's future, hit that like button and subscribe for more in-depth crypto analysis. And for an even deeper dive into specific Bitcoin Layer 2s that could explode, check out this video next. Thank you for watching, and remember, stay informed, stay strategic, and keep building your future.